Hi, this is Justin Nielsen with Investors Business Daily. Today we're going to be talking about swing trading and cutting your losses quicker than you might normally. And normally we have that stop loss, but sometimes there's early warning signs that can get you out a little bit quicker. Now, another factor here is just kind of think back. Have you ever had a round trip in one of your stocks? A round trip, what is that? That's when you have some good gains in a stock and then you end up right back at your purchase price, right back where you started, a round trip. So the biggest problem with that is you've got two emotions that are going to be struggling in your body here: hope and fear. You start hoping that you can get those gains back, when what you should be doing is fearing that the losses can get worse. So as an example, let's take a look at DocuSign. The symbol on this is DOCU, and we'll just go ahead and pull up a MarketSmith chart for you. And you can see right here, DocuSign was an IPO. That's an initial public offering at the end of April. And at that point, it had a phenomenal move, up above 65, a really strong move out of the gate. And then it had a correction. Now, this correction looks really steep, but it's only 25%. That seems pretty large, but given the move that it had, that's actually not too bad. And what's really important here, where it got our attention, is that it got some support at the 50-day moving average once that line showed up. That's the red line right here. And not only did it bounce off of that line, it did so on very heavy volume. So that reversal, that bullish reversal, is what got our attention on Swing Trader. Let's go ahead and zoom in and take a closer look. So here you can see where it got on our radar, and what immediately happened is 2 days later, we were almost at our first profit goal of 5%. We were actually 20 cents away from it. And that happened really at the open on that day, but then it reversed, and by the close, we were down considerably from where we were at the highs. That's a bearish reversal. So we had a bullish reversal that got our attention, now a bearish reversal that's making us a little nervous about this trade. Things got a little worse the next day. It got below the 5-day and 10-day moving averages. The 5-day is the pink line on this chart, and the 10-day is the green line on this chart. Now, it was just barely below those lines, so given the fact that it recovered off of its lows, this was one that we decided to hold on to for a little bit longer. Also, sometimes you have to give IPOs a little extra room. The next day, however, was a decisive close below both the 5-day and the 10-day moving average. We actually took this off before the close because we like to give our subscribers a little extra warning before the close so that they can get their trades in. So we had a stop loss on this stock at 52.50. So you can see that we hadn't hit our stop loss at this point, but we had a number of warning signals that something was not right with the stock. And that rule in particular, to cut your losses when you're decisively below the 5-day and 10-day moving average lines, a close below those lines, was something that really saved us a lot of money in this case. You can see that it just got worse from there. It ended up taking out the stop loss, and the big issue here is that rule about cutting your loss quickly at the 5 and 10-day moving average line was something that really helped you combat the emotions, that hope that, hey, I was almost at 5%. Let me just wait until it gets back up to that level. So rules over emotions, that's something that's going to help you a lot with your own personal trading. I hope this video has been helpful for you. For more information, you can always go to www.investors.com/swingtrader for more information on our product. You can also take a look at our weekly columns that we have. That's under the research tab on investors.com every week. Thanks a lot for watching.